The M&E process is an effective tool. Often, businesses tend to rubber stamp their way through M&Es or measurement and evaluations, to expand on that a bit. But the true intent of M&Es is to generate insight and provide key learnings. So for a small business, and though NRM rides on analytics and data generation over time, it's a myth to think that NRM cannot survive with those data and insights. It is built, and I spoke about NRM being a sustainable way of growing profitability, which means that data generation and insights needs to be built over time. So for a small business, for each promotional activity that we run, we need to go through the process of understanding what worked, what didn't work, and what can we do differently going forward. Once you are able to develop the culture of ensuring that these performance management routines are happening consistently, then it doesn't matter the size of business, but there's always something new to learn to improve that promotions that you're running. Why should firms take NRM seriously? So there's demonstrated evidence that firms that have NRM capability running within them turn out to be more successful over time compared to firms that are not, right? The modern businesses tend to use innovation, short-term decisions to improve profitability. Now, if that profitability is not sustainable, over time you find yourself in decline. So why is NRM important? NRM is important to ensure that at every step of the way, there's a sustainable strategy in place to consistently improve profitability over time. So we spoke about the various levels, right? It means that you are thinking ahead and you are thinking about your consumer, you are thinking about your customer, right? And you are making the right decisions on category, right decisions on product over a long time. That brings sustainability. So if any firm who wants to ensure sustainable profitability should be very concerned about building that NRM muscle within the firm. So over time, a lot more businesses are building muscle on net revenue management. It's been difficult for some, and there are three key areas of obstacles that needs to. So the first one I will talk about would be leadership buy-in or leadership support, right? Short-term profitability is always at the heart of how we drive businesses. What is the first quarter's performance, for example? What's the second quarter's performance? How was it better than the previous quarter? Those are within the year. So getting leadership to understand that you need that sustainable approach. This could take 2 to 3 years. It could be embedded in a 3 to 5 year strategy, for example, and you need to build a function that supports it is one of the solutions to embedding NRM within any firm. The second bit is NRM is both a capability and a function. So NRM is not something that one person sits to do. NRM is it's a mindset that needs to run through the entire firm. So each marketing, customer marketing, finance person should have an NRM mindset. People that you have within your supply chain should have an NRM mindset. So you need to build that capability of net revenue management within the core teams of a firm to ensure that this is happening. We spoke about performance management, M&Es, right, and having a learning culture. To be able to have learning culture, generate the right level of insight, you need to have a data retention structure within a business, right? The performance management approach should be available to be trended, to be studied, for insights to be generated. Yes, you can start NRM without the complicated analytics, but for NRM to mature, you need to ensure that you have a model that generates insights and the analytics are there to improve net revenue management going forward. There are best practices, but I'll focus on one I want to expand on performance management. Performance management is key. A lot of firms already are running some of the key levels of NRM: strategic pricing, promotional effectiveness, trade terms. These are standard levers that are being pulled across businesses. But the performance management culture is key. That is one that you wouldn't find quite existent, that people haven't built the muscle. At the same time, that area also falls into the third component of the challenge that I spoke about in terms of building the data structure that generates insights over time. So in terms of best practices, I would say that the M&E process should be holistic. It's great to have the promotions, but it's much more important to sit back and then assess after how have we performed. It's not really restricted to only promotions. Even when you make pricing decisions, sit back and understand. We made this pricing decision, the strategic pricing decision, in this period. Over that period, what has happened? Can we see the charts? How does the volume look versus what our estimation was in terms of a potential decline? Is it declining at the rate that we expect it to, or is it declining a little bit faster than we intend? Where is the position on our market share? How does it look? Can we tweak some of the decisions that we made? What is not working? Were we too aggressive on one category versus the other? For example, when you go into promotions, look at the occasion that was used. Look at the timing. Look at the depth of the promo to understand, was the investment shallow? Was it deep? Did it achieve its objective? So performance management is key, and is one of the areas that steps change what businesses can do with net revenue management.